Hey, hey, hey! Hello, traders, noobs, apes, and everyone else. It doesn't matter here, everyone is part of Drippy Gang. To those who are new here, I am Drippy, your source of options drip on a daily basis. Here we talk about some of the most exciting setups based on the options flow, technical analysis, pattern analysis, macroeconomic events, and current market structure. So if you want to make some tendies, stick around. My goal is for all of you to achieve financial freedom and create life-changing wealth. On the screen, I have my Twitter account dedicated to this channel and interacting with you folks, so make sure you follow me there for free alerts, my entries, exits, non-stop commentary on the market whenever I get time. The Twitter handle is @drippy2hard. My main source of options flow data is Unusual Whales. I highly encourage you guys try it. Also, Unusual Whales bro, if you're watching this video, I would love to be an affiliate if that's a thing. Alright, before we proceed, please note that the content I share here are my opinions. I'm not a financial advisor. You are responsible for managing your risk and taking profits. Now, some of you might not know this, but I do have a full-time job and trading is my passion. I believe this is my ultimate destiny. That's why I'm spending so much personal time creating free content for you guys. I would highly appreciate if you guys like my videos and subscribe to the channel. After all, it's free for you. Now, I'm aware that some of you have asked about my private Discord, and I don't plan on creating it until I reach a substantial amount of followers, let's say like 5K, because managing Discord is it takes time, and I would need volunteers. So yeah, we'll see about that in the future. But for now, I'm thinking about setting up Patreon, where I will share like additional content and setups which are on my radar, which I cannot cover in YouTube videos because I give you the cream of the crop. But these other ones are equally good. So stay tuned on that. So without further ado, let's proceed with today's agenda. We will talk about our winner, GPN, and how I found it using Unusual Whales hot chains. Then we will go over my mindset after I was in a trade. Why did I buy the dip? Why didn't I sell my calls when it tripped? Why did I roll over my calls, and much more. And to those who haven't watched the previous video, I highly suggest you watch that before this one, because that will give you insight into my mindset and also how I confirm my bias using the flow data. Highly recommend to watch that one before. And so I know a lot of you guys are eager to know that how I found GPN on Unusual Whales, but before that, it's very important to understand this thing. Like, there are millions of strategies you can formulate using a flow analysis tool like Unusual Whales. You just need to find a strategy that works for you and your personality. So in my case, I like scalping and swinging weeklies, and these are both highly risky, but if you can manage it, and reward is phenomenal then. So my goal and mindset is to find cream of the crop, best of the best setups, and I go through a checklist, and whichever stock goes through like all those filters, that's when I add it to my watch list, and I know that I'm good to go. And finally, we calculate our risk reward and then trade management and everything else, which is a different topic. I'll cover that in a future video. So yeah, this hot chain based strategy works for the swing case, And the best part is, so this is how the hot chain view looks. So we'll come to this in a minute. But I was saying that the best part for this is that you can do the analysis when the market is closed. Uh, like right now, I'm forced to do that because I have full-time job. So help a brother out, like and subscribe, you apes. Anyway, so every day with after market close, I'm looking for unusual call activity in the hot chains, and these are the things I am looking at. So first, I will just give you a list of things, kind of like I'm looking at. So you can take the screenshot of this, and I will post this on Twitter as well. But for now, I'll go through these through an example so that way you understand better. So don't worry about this list, I'll share that with you later. But for now, so this was September 1st, right? Like this doesn't allow you to go back in time, which I wish unusual whales had, like hot tickers and chains in the past. But there is a way to get around that. But on that day, like among these, there was GPN. And so first you need to understand that this is 15 delayed by 15 minutes. So I won't recommend this for scalping. There are other strategies for scalping in which you have to kind of look at the flow while it's happening, and you can apply filters and stuff. Let me know in the comments below if you want me to do like scalping strategy and morning open range breakout strategies and stuff. I can cover those in the future videos, but in this one, we'll focus on this, right? So I posted on my Twitter this thing. So wait one sec. So I need to find where is that. So I think, yeah, this is the one. So first thing, yeah, there are 4 entries here, 4 columns, right? This one is first is call volume, and what that means is total call volume for that ticker. And then the one in the bracket here, the 40.18%, what that means is it's today's call volume with respect to yesterday's call volume. So this means that calls are up 40% from yesterday. And here puts are up 61% from yesterday. So the overall option contracts volume is more than yesterday. And in this case, puts are more. And just by looking at this, you cannot say it's bearish or bullish because someone can sell calls, that would be part of this, or someone can sell puts. So it's not just ask side here. This is ask and bid combined. So yeah, keep that in mind. And then here we have the call volume percent. So this is the out of all the contracts traded here, how much is basically ratio of this, right? Like ratio of this number divided by sum of this and this. So it's like how much of the contracts are the calls here. And then right here, the one in the bracket here is the same thing but yesterday's value, right? So you can see nothing much has changed. This is not really unusual. And final thing is like how much of this is call premium. So again, it doesn't mean this is like bullish because someone can sell calls, but it's good to know that call premium compensates for a bigger chunk of the total premium, right? Like anything above 70% is a good sign. So this, you need to understand this, memorize this in your brain, try it, because you need to go through a lot of like tickers, and the faster you are, the easier it would be. So on September 1st, right, which was last week, I was looking at the hot chains and I saw GPN like ACTG here, right? Like first thing I do is like sort by call volume. So you like it can either do the low to high, high to low. So that's good. So this is important, right? So we want to look at this, which is called like the excuse me, call exceeds put volume by a large amount, right? And this number here is compared to yesterday. So look at this, HDSN, right? Like this is highly unusual, right? Compared to yesterday, this is so high. So this can catch your attention, right? And good thing is that yesterday call was 50% and today is 100%. So that means something big happened, right? This gives you information that either something is going to happen or something is happening, something has already happened, because these are contracts traded right after the market. Like this gives you net after the market close. So in order to kind of find that out, we'll go to the different section of unusual whales. But for now, this gives you that information. And then finally call premium. So like here it's again bullish here because call premium increased, right? So let's go through some other examples here, right? And like you also have to keep in mind that right, like anything less than 1,000 contracts is not liquid enough, so spread might be too wide for you to get out. So I try to look at something here like first the volume is greater than 10,000. It depends on market and everything else, but like sometimes overall call volume is low and then you just have to adjust your criteria. So this is more like a manual process than automated. But yeah, so you look at this and then you look at how the call volume from yesterday is high, right? So this shows that it's at least repeating from last 2 days that it's green, and like which is amazing, right? 2 days in a row, boom boom. So this might be a runner, right? Or this might have already run. So on that day I was just going through this list and GPN caught my attention because I have my own personal scanner which I've written, which kind of automates this process for me, and GPN hit on that one as well. And that was like there were a couple others there, but GPN like cleared my other criterias, which I'll talk about. But yeah, so that was kind of, I was curious. So on that day's flow, just to give you an example for GPN here, so that was September 1st. So see, one good thing about unusual whales is like you get date here. So you know that on September 1st, look at the call volume here, 12,747, and which is like almost like 2.5 to 3 times the average call volume, and the put volume is low. Now what caught my attention was that this is unusual, right? Like actually on that day the price decreased, right? And if you look at that chart, it wasn't really doing much except just going down, like it was a flush. So this caught my attention because I was like, well, it hasn't even moved much, and how come the call volume is more? So this is why when I started looking into this more. So my next process is simple, right? Like what I want to look now is here. I will show you. I already have it on the screen. So since I don't have the flow charts for that day, I just want to show you that this was what I saw on the flow that day. And look at this, right? Look at this here, expiring 19/11/2021, right? So I don't know what happened, but yeah, expiring 9. And then also on top of that, you see number of strikes here. So this is way out of money because the price was, I think, around that time 150. So these are out of money calls, and like these are like closer to the market close, right? So this is important. Every data here is important. You need to connect the dots. You need to synthesize from all the information you have right now. And these are floor orders, so which is good. And then also dividend date upcoming. And payment sector is really hot right now. I told in the last video that look at iPay chart. It looks like it's about to just like go berserk. So yeah, and this has big names, Square, Shopify, and they're not gonna go down that much. So this was like down way much, and earnings were amazing for this one. So so until at this point, I'm like, well, I'm convinced that this seems like is a good candidate so far. So next thing I want to do is, so first thing we verified there was unusual flow, and then call volume was greater than 300% in this case, and call premium was greater than 75%. You can see it here, right? Call premium is 94% that day, and previous day it was 80%, so that's good. And then I finally check bullish premium greater than 70. Like anything less than 70, I start to question it. Above 70 is healthy for me. Put call ratio is really good. Anything below 0.1, to be honest, is good. And it was the same the other day, even though the price didn't increase much. So 2 repeated days. So someone knows something. And we need to capitalize on this, that like the whole strategy I told you, that I want low risk, high reward, and then something which can run in like next 2-3 weeks. This is a swing play. So after this step is done, what I do is, I check the intraday section for the chart. So like since this was in the past, I will show you for one of the examples, like the first one here, ACTG. And if you look at the historical flow for this one, so look at this now, like this is catching the attention, like 1,000 calls, and this is like 5 times the average, and call premium is 100%, but the bullish premium is not that good. But look in the past here, this has been runner for a while. This is a multi-day runner, 2%, 3%, and put volume is so low, call volume, so everything looks amazing for this one. But then here the call volume starts decreasing. So that this stock is kind of controlled by options flow, right? Because the price is being dictated by when the calls are being bought, right? So this is a good information, because now we know that if someone is buying and they might be creating gamma squeeze or something. But in this case, it has already run like 9%, so that's kind of not a red flag, but it's like, well, how it has run already, so is the risk reward like worth it at this point of time? But if let's say that it was only like 1% up, next thing I would do is just check this overall premium, and then also I look at like just this was the intraday, so look at the open interest. So every information you have to synthesize from everything. You need to create a script here, like you can narrate the story of this stock if someone asks you, and this is how you create conviction in your trades, and you will not chicken out even if you have a bigger position size, because you know that you have done all your research and there is a whale behind you. You're not alone in this. But couple quick things, since like this doesn't have big option trades, let's look at something else here. So let's look at this one. Look, this looks really unique, 35,000. So my first criteria is like greater than 10k, looks great. Here call volume increased and 75% is good, and the best part is the premium was 90% plus. So this is a good setup even from just looking at it. So now let's look at this from when you click on this, you get the historical flow for this. So now this is something you need to see. Look, 10,000 contracts here. The average is 1,000. This is 10 times, but the bullish premium is 39%. So that means what people are selling calls. Like if people were buying calls, it would be greater, like in this case, right? But this number is not much, so you need to make a complete picture. But in this case, look, call our criteria 99%, 99% greater than 90, great. And then this is greater than 70, great. 0 puts, amazing. And the value, it didn't move that much, but we still need to see the chart. But so far looking good. And then another thing you can do is go to intraday analyst, and you type the name of the chart, and then you see here that someone bought and sold, and like, so first thing I look for is how much is the premium. In this case, it's not that interesting. It's only 27K. So I am not interested in this trade. I'm looking for greater than 100K at least. And yeah, sure, you can make money on this, but it's not whale. It's probably a retailer. So skip it, right? So you kind of have to do this for multiple tickers which get your attention. So for example, COLM has been back to back 2 days, the same thing. So I do the same thing for this one. I go here, click historical flow, and this looks amazing. Look at this, 3,000 contracts, and the average is 50. So this is highly unusual. This is really unusual, right? 3,000 contracts, average for 30 days is 54, and bullish premium. So this is catching my attention. Now I'm getting excited here. Look at this chart, right? Boom, like greater than open interest. Bullish premium is good. So you know you're excited about this setup more than the others. So, and then finally what I do is I look at the levels here. This is like my housekeeping final sanity check. Looks really great here. You know, you can view it in full screen, and then you can just play with it. And here it says 110 calls and expiring October. So this is good. Like this is coming soon in a month, right? Anything within a month is a good sign, and everything is looking great here, all green. But there are no orders above this size, but which is fine. But I guess retailers are interested in this. So final thing I do is I will look at the intraday. Sorry, what was the COLM? So yeah, interesting, very interesting. This is actually a really bullish setup, right? 178K. Anything above 100 is good for me. Look at the time here, 3:44. So this is a good sign. This shows us urgency. And you know, this is a good bit. So like it's not too expensive contract, so you can play with one contract. And there is a sweep order here. So now you know this is exciting, you know. Now you're getting somewhere, you know. Maybe this may be, but here you see put volume is more, but you gotta look at the, and now look here, call, it's like all call volume here. These are probably puts from previous, or people are selling puts because they're so low. And yeah, so 2890 contracts here, and again for even for this date. So overall, like a bullish setup. So next thing you want to do is look at the what chains are hot. So anything above 1,000 volume is good because you can get in and out without paying too much for the spread. And if it doesn't work out, you can get out without losing money on just market orders. But so overall, looking solid. Like call volume is great. So now this has given me all the signs I need to move forward with the chart. And this is where you need to like also, oh yeah, one more thing I wanted to say, that I also look at the strike price. Like if it's repetitive, that means that people are bullish. And this is out of money for this stock because the underlying value for this stock, you can check on the chart here, is COLM. So underlying is 102 and this is 110. So this is actually a really good setup. I will discuss this one in the tomorrow's video maybe, because this looks like a really good risk reward setup, right? What's your risk here? Like it's on a trend, bounced from this value, and volume looking amazing. It's in a squeeze. Oh my god, this looks great actually. So see, this is how you create your thesis, and it's literally like around, oh my god, this is a great setup. So you know, there's so much to cover here. 113, right? So the next thing I look is key level, support, resistance. And I covered this for GPN in my previous video, so you can kind of look at that. But this was my chart note, right? Like this was the chart setup before I shared, before the trade happened. And you can see here that it was in demand zone, trendline support, and I said like macroeconomic events. And yeah, it just bounced off, and I'll discuss why it ran that much later. But yeah, so this was the setup that time, and it's not the most bullish setup, but I had my thesis here. But in this case, this one looks super bullish, so I'll cover this in a future video, the technical analysis. But for now, let's move on. So I hope that you guys now have an idea on how to like work around the hot chains, and like you're getting a hint of where I'm going with this strategy. Now, one final thing I do before is like I look at the news for this chart, everything, like on Printwit I search if there's any information which is relevant to me, just like a sanity check on Google. I look at the news section here, and in this case, it was a merger acquisition news which I wasn't aware of, to be honest. And this is where someone knows something and we got that. So yeah, after everything, like everything is done, once you find setups like those, I add them to my watch list and I put levels in. I don't YOLO, don't FOMO. I wait for key levels to hit and I then get in. Sometimes I will do because my risk tolerance is high and I have a hunch based on just experience trading these setups that it will work out. So I would not recommend you guys do it if you guys are just starting. Once you figure out the levels and everything, you can go to like option strat and calculate like profit. So for example, for COLM, if you're looking at October 115 calls, 110 calls, you can calculate profit loss percent here, just like so 115 is right here, so that's 400%. So it's a 400%. Let's say your risk is 35%, so your risk reward is literally like 400. Let's say your risk is 50% in this case, so your risk reward is 8 to 1, because you are making 400% to lose. You will make 400% and you're willing to lose 50% of your capital. So 400% by like 50%. And then where was I? So yeah, once you have done that, you can watch the previous video. And then once you have done all of that, you have a conviction in your play, and now all you have to do is just wait, wait for the setup to play out the way you want, have formulate a plan, like position how much size you would put, total risk, run like various scenarios based on market performance. And once you are in a trade, reevaluate based on price action, right? Scale out key levels, important to lock profits. So yeah, so I want to talk about like all this worked, and this was the chart I shared before the big move like happened, and this exceeded our expectations. What a fantastic trade here. So congrats to folks who made bank on this. Let's see what we can learn from it, and some of my closing comments for the video. So on this day, I was buying the dip, right? So if you look here, September 1st was this day. So that got my attention. I got some contracts here. I waited, I added dip here, and the next day I added more. So my average price was, I think, around 0.4 for per contract for 170 calls, September 17th. So more than 15 days. So I have enough time for it to work out. And the whales didn't sell. I was checking on September 3rd and 2nd that if the calls bought were sold. So this was a good sign for me that, okay, this guy has not sold yet. So, and my risk tolerance was big. I was like 180 or below this level. right below the last support level. So in this case, yeah, like my stop was kind of here, like, but I didn't expect it to kind of go there, because if you look at the weekly chart, right, like there's a volume gap under, and it was right on moving average. This is where, like, buyers step in anyway, and it just so happened that the news was pretty good. And I think on that day my mindset was like, first I was really surprised by this big move. I was expecting it to kind of get some resistance here and fall down, like usually these patterns do, and especially in this market environment. So like that day everything was red, so I was like, well, I don't think it will do that. But surprisingly, the volume was so huge here, so I was like, wow, this is unusual anyway. And maybe the investors are like, they really like the news, because PayPal had the news as well that day, so the whole sector kind of got this. So this was a sympathy play. And I bet you guys, like, shorts were scared at this level, and investors are hitting the bid and shorts are also hitting the bid, and that led to this huge candle here, which gave us like huge premium spike. I think around at this day itself the calls were up more than 1,000%. So in a day we made that trade. So like now this is where your experience comes into play, because some of you will sell around this area thinking that, man, like, let me lock the profits. And I used to do that too, but now I've like kind of experienced, like, just looking at the price action on the volume, that yeah, like this one is mover. And so what I did was, this is very important, right? People don't take profits, they keep it. So how to take profits while also be in the position so you don't lose out on further profit, right? You roll over. So my contracts were 170 contracts. I sold all of them except keeping like one or two. And then my 170, I got 175 contracts because my next target was this. And that was same expiry as the September 17th. So, and so in the hindsight, I think I should have got the September 10th one, because that would have given me more, percentage gain, because the closer to expiry, the IV increases more. But I didn't want to risk too much in this one. So at this point, I've already made a lot of money on this. So I was like, let us just play out. It was house money for me. So I didn't want to like micromanage the trade, and that was my plan. I wanted to swing it, so that's why I kept it that way. And now, like, next day it ran to 175, and I alerted the members, followers on Twitter, that I'm getting out, because I've hit all my levels. And as soon as it did, it just bound, like, shorts came here, and like sellers and dip buyers are selling here, selling pressure increased here, and this is where I sold. So perfect trade, got in here around this area, sold here, overall banking 1,900 profit in this trade. Best trade for me so far this year. And I wouldn't have found it if I didn't look at, like, if I didn't have that hot chain strategy which I shared. So I hope you guys learn something from this video. And also, look, I'm still bullish on this, because it's like kind of, I think I hope that this consolidates for 1 or 2 days more in this zone and bounces off, because it's currently retesting this short EMA on like daily. So, and it is in the demand zone, so I'm expecting some kind of bounce back. And this stock has a nature to kind of pick a direction and then move in that direction, at least for like a couple of weeks. So look at this, like, big drop and then bounce. So big drop and then bounce, big drop and then bounce. So in my opinion, it's gonna go touch this level. So it's in my radar for now, and the whole sector is looking bullish as well. So if you look, the whole sector is in squeeze. The MACD is about to turn positive here. So it's a bull flag, and so in my opinion, this is gonna be the reason why this sector moves. So with all this, keeping in mind, like, what can we learn for our next setups, right? So some of the things which we need to keep in mind are, the IV was low because, like, this was getting crushed after earnings, and there was a strong catalyst behind it. Sector was strong, and acquisitions and mergers are hot right now. And flow data was so bullish. There was a trendline support and demand zone, and finally, we take advantage of the IV spike, and we got like out of the money calls which were expiring soon, so that gave us such a huge premium spike. So these are the kind of setups I'm interested in at this point of time. I do like scalping, but this is working great for every one of us. So let's just continue it. And hopefully by now some of you are awake and understand the strategy. Go implement it, on your own and see it works for you. This is just one of the strategies which is working in the current market for me. And we need to be adaptable to switch strategies based on different market condition. It's just there are a lot of factors, and this is what I will talk about in the future videos as well. So I have all the intentions to keep updating regularly, and we all learn together, because no matter how good of a trader you are, you can always learn. I can learn something from you guys, and hopefully you guys learn something from me. So if you have any questions, comment on these, like any comments on this strategy, please let me know in the comments. Hit the like button, subscribe, and smash the notification bell. See you in the next one, friends. Bye for now.